get to Steve Liesman for the Fed's decision on interest rates.
The Federal Reserve keeping interest rates unchanged at 4.25% to 4.5%. But seeing a higher chance of stagflation. They didn't use that word, but here's the language they did use. They said the risk of higher inflation and higher unemployment have risen, both of those together in the same sentence. They went on to say a further increase in uncertainty. There's a further increase in uncertainty around the outlook, adding that word further to the prior statement. Also noting that swings in exports have affected the data. That's why we got to that big negative GDP number, and they took note of that for the first quarter. But saying economic activity still continued at a solid pace. The unemployment rate is stabilized at a low level, and that inflation remains somewhat elevated. So all of that basically in line with our understanding of the hard data. They say they are watching risks on both sides of the mandate. The decision was indeed unanimous. Quantitative tightening will continue, and the committee is prepared to adjust monetary policy as appropriate, which is a language that they've used in other times. Guys, this notion of the risk of both higher inflation and higher unemployment have risen, it really underscores that idea of there being risks to both sides of the mandate, and the Fed apparently being no closer to figure out which one needs more careful attention from the Fed yet. Kelly?